All right, so buckle up, because today we're diving deep into the world of venture capital. Specifically, we're looking at how to stay afloat, maybe even, ride a wave or two when the market feels like it's caught in a crazy riptide. We're breaking down Allied Venture Partners' 2022 annual investor letter.
Yeah.
Yeah, that year when the economy felt like one of those spinning carnival rides that leaves you a little queasy. It'd be easy to think, who's thinking about startups in a market like that?
Right, right.
But these guys, Allied Venture Partners, they didn't just survive, they kind of crushed it. Pulled in over $1 million, added 9 brand new companies to their portfolio. I mean, talk about making moves.
It's really impressive, yeah. And what stands out to me is the total funding they were a part of, $28.35 million. That shows you the power of their network, their ability to attract other investors, serious players who trust their judgment.
Yeah, like, give me some names.
We're talking Slow Ventures, Gangels, even get this Pharrell Williams.
Hold up, Pharrell Williams. Okay, now you've got my attention. But let's be real, we all know the name of the game is returns. So how did they do?
That's where Allied VP really sets themselves apart. Their follow-on investments saw markups of, get this, 6.25x, 5x, even 2.1x.
Whoa, break that down for me. What does a 5x markup even mean?
It means that for every dollar invested, they returned $5 to their investors.
Okay, now that's what I'm talking about. So they're clearly doing something right. But 2022, let's be honest, it wasn't exactly smooth sailing, was it? How did they navigate a market that felt like it was one headline away from a total meltdown?
Yeah, 2022. You said it, not smooth sailing. It was a wild ride, that's for sure.
Yeah.
I mean, who could have predicted the war in Ukraine?
Right. Talk about a curveball. Nobody saw that coming.
And of course, that sent shockwaves through the global economy. Suddenly, everything felt shaky.
Yeah, it was like dominoes, one right after the other. You had the war, then bam, inflation goes through the roof, and then bam, again, interest rates spike like crazy.
It was a recipe for disaster.
It felt like everyone was holding their breath, waiting for the other shoe to drop.
And the headlines didn't help, that's for sure.
Oh, tell me about it. It was all doom and gloom. Recession this, downturn that. I mean, how are you supposed to make sense of it all?
Right. It was overwhelming. But, if you step back, look at the bigger picture, there were some bright spots.
Okay.
I'm listening.
For starters, the U.S. economy, it actually managed to avoid a full-blown recession. Banged up a bit, maybe, but not broken.
Okay, so not as bad as it could have been. What else?
In Canada, they actually showed some impressive resilience throughout everything.
All right, so maybe a little good news there. But I got to ask, what's the takeaway for the average investor? I mean, should we be digging a bunker in the backyard or?
Well, I wouldn't go that far, but this is where things get really interesting, especially for those who are paying attention.
So tell me more. What are you seeing?
One of the biggest shifts, and I think this is key, was a change in tone from the central banks.
Right.
Remember all those aggressive interest rate hikes?
How can I forget?
Well, they started hinting that those hikes might be coming to an end.
Oh, so does that mean things are looking up?
It's a signal, for sure. Maybe not time to celebrate just yet, but definitely a reason to be cautiously optimistic.
Cautiously optimistic. I can work with that.
And you know what? These times of uncertainty, they create opportunities.
Opportunities for who?
For those who are willing to look a little closer, while everyone else is panicking, the smart money is looking for those hidden gems.
I like the sound of that. And speaking of hidden gems, that brings us to what I really wanted to dig into today, early stage venture capital. It's like Allied Venture Partners, they saw the storm coming and decided to build themselves an ark.
Exactly, and that's what makes their approach so smart.
So break it down for me. What's the advantage of going early stage when the market feels like a roller coaster?
Think about it. When the market took a hit in 2022, who felt it the most?
I'm guessing the big players.
It was the growth stage companies, the ones about to go public. They're the ones tied to the stock market's every whim.
Okay, makes sense.
But early stage companies, they're in a different world.
So what are they doing differently?
They're heads down, building their product, refining their ideas. They're not at the mercy of the stock market yet.
So they're kind of insulated from the chaos?
Exactly. And here's the kicker. All those lower valuations we talked about in the growth stage, they trickle down.
And that creates opportunities for early stage investors.
Huge opportunities. It's like getting a chance to invest in the next big thing, but at a discount.
Okay, now you're really speaking my language. But how do you even find these opportunities? How does a firm like Allied VP do it? So let me get this straight. Allied VP, they're not just building a network, they're going global, bringing in Canadian companies, international companies, the whole shebang.
That's right.
And on top of that, they're talking about launching a pre-seed fund.
They are, yeah.
Okay, I got to ask, what exactly is a pre-seed fund? Are we talking like seed funding?
Yeah.
But earlier.
You got it. It's about getting in at the ground level even before seed funding kicks in.
So even riskier.
You could say that, but also potentially way more rewarding.
Higher risk, higher reward.
Yeah.
Got it. But paint me a picture here. What does pre-seed actually look like?
Okay, so imagine a company, right? Barely even a company. Maybe it's an idea, a business plan, a napkin sketch.
Okay, I'm imagining.
That's pre-seed territory. You're betting on the founder, the team, the raw potential of the idea.
High stakes.
Definitely. And because you're coming in so early, the investments are smaller. We're talking maybe $25,000, $50,000.
Smaller investments, but bigger potential upside because you're there from the beginning.
Exactly. It's like buying land before the gold rush hits.
I like that analogy. So it sounds like Allied BP is laser focused on getting ahead of the curve, spotting those future unicorns before they even know they're unicorns.
Exactly. They're not chasing trends, they're anticipating them.
Which is, let's be honest, a lot easier said than done. So for someone like me, your average investor, not a venture capitalist with a crystal ball, what's the takeaway here? How can we apply this kind of thinking to our own investment strategies?
It's all about being informed,
Right.
doing your research, understanding the markets, and not being afraid to think outside the box.
So don't just follow the headlines, dig a little deeper.
Exactly. Look for the sectors with long-term potential. Remember those industries we talked about, the ones poised for growth even when the rest of the market is shaky.
Yeah, I'm with you.
Start there. Maybe there's a local startup tackling a problem in one of those sectors, something you believe in. You don't need to be a millionaire to dip your toes into early-stage investing.
You're saying even a small investment can make a difference, both for the company and potentially for your portfolio.
Precisely. And there's something else to consider, too.
What's that?
Early stage investing, it's not just about the money. It's about supporting innovation. It's about getting behind those dreamers, those entrepreneurs who are out there trying to change the world.
I like that. It's like you're investing in a better future, not just a bigger bank account.
Exactly.
So to sum it all up, what we've learned today is that Allied Venture Partners, they're not just riding out the storm, they're surfing it.
Right.
They're showing us that with the right strategy, a bit of courage, and a whole lot of research, you can find opportunity, even in the most volatile markets.
I couldn't have said it better myself.
And on that note, we're calling it a wrap. This has been The Deep Dive. Catch you next time for another deep dive into the world of, well, whatever fascinating topic we unearth next.